Today we're going to be talking about Alibaba. On Thursday, they announced a new business venture called Alibaba Guaranteed. We will discuss what that encompasses and how it could affect the business. We will also take a look at the bigger metrics around Alibaba, including revenue, EPS, and free cash flow. And finally, we're going to take a look at Alibaba's valuation compared to the broader market and figure out where Alibaba's stock price could go if it were to trade more in line with where the market is trading at. So if you enjoy the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. Alibaba has had a decent start to the year, trading up almost 5%. However, more recently, the stock has pulled back from its 2024 highs of almost $90. Since then, the stock is down about 11%, currently trading at a price of $78.41. Over the course of the last year, Alibaba has dropped by almost 9%, and it gets worse when you look at the last 5 years as the stock has fallen over 50%. And Alibaba was looking very promising leading into and even throughout 2020, hitting a high of $310. However, since then, we have seen a number of different things affect the company, whether it's the US potentially delisting Alibaba from the New York Stock Exchange, or even the Chinese economy being in shambles. There's been a lot that has affected this company and driven the price down by over 70%. Over the course of the last year or so, Alibaba has been looking for different ways to unlock value within the company. One of the ways they decided to try and do a year ago was splitting the business into multiple units and potentially IPOing those other units. However, this idea was eventually scrapped, and now Alibaba is looking to unlock value by rolling out a new business-to-business e-commerce platform. And the new business is going to be called Alibaba Guaranteed, and they're expecting it to grow their business-to-business gross merchandise value by about 20% in 2024, from $50 billion last year to $60 billion this year. And overall, this should help Alibaba's core business in a major way. When they started the company back in 1999, the primary goal for Alibaba was connecting Chinese manufacturers with foreign bulk buyers, and they have done a very good job of building out this business over time. Right now, the company is exporting about $350 billion per year. This is roughly 10% of the value of all Chinese exports. And this is part of Alibaba's business that can make them less reliant on what's happening in the Chinese economy. We have seen over the course of the last 2 years, the Chinese economy take a major hit. Their housing market was in very deep trouble, and they're starting to turn that around. But one of the ways that Alibaba can diversify away from China is by expanding their export business. And even though we are seeing some large US companies talk about moving their manufacturing out of China to India, we're still seeing Chinese exports grow in high single digits. In 2023, they grew by 7% to $3.6 trillion. And with the launching of Alibaba Guaranteed, they are looking to make business-to-business sourcing as easy as shopping on sites like Amazon. And this is by offering fixed prices for goods, shipping fees that are included, and guaranteed delivery times. These are all going to be very, very important and are super important for small businesses. When you think about some of these bulk sites, sometimes they are offering variable pricing. So not knowing how much these goods are going to cost you as a small business is something that is very concerning and can be detrimental to the business. Also, shipping fees. From China to the US or China to Europe, shipping fees are very, very expensive. And this is something that small businesses need to know on the front end. They need to know how much these products are going to cost them, and they can't have variable shipping rates that could affect their overall margins. And finally, guaranteed delivery times. Again, from China to the US or China to Europe, you're talking about longer delivery times. And these small businesses need to know when the products are going to show up so they can offer them to their customers. So not only do all these things encourage small businesses to buy from China, but also Alibaba wants to help the Chinese merchants as well. A lot of these transactions that are overseas or cross even borders can be very complicated when it comes to restrictions, import, export fees, all of that. And what they want to do is they want to take this out of the hands of the merchants and start managing it themselves to try and simplify this process and make it easier on both ends, not only for the small businesses, but also for the merchants in China. On top of this, Alibaba has rolled out AI tools that are here to help merchants interact with buyers. They help display goods online as well as manage correspondence. And this second one is very, very important. When you're talking about a Chinese company interacting with companies in Europe as well as the US, you have two major barriers. The first being language and the second being the time difference. When you interact with these Chinese companies, if you send an email today, you are not going to get a response until tomorrow. And that can cause issues and delays for a lot of these small businesses that they don't want to have, as well as it can be difficult to interact with them because of the language barrier. This AI tool can help bridge both of those gaps by interacting with buyers with preset answers to questions. And overall, this should really help both on the merchant side, but also the buyer side. And so far, this has actually created a reoccurring revenue source for Alibaba of $100 million US. Overall, Alibaba is hoping that these business expansions will help the valuation of the company, because right now it is in a very difficult spot. The forward P ratio on Alibaba is sitting at a 9.35. And a lot of this has to do with the poor growth that we have seen in the last couple of years. We saw negative growth throughout 2022 and into 2023. And then in 2023, we saw single-digit top-line growth. We're talking about a company that does have a very large top line. Currently, their trailing 12-month revenue is sitting at $130.5 billion. And they did see a lot of growth being pulled forward in 2021, where at one point they saw year-over-year growth of their revenue up 101%. And if we go back about 5 years, we can see that their revenue has over doubled. They were bringing in around $60.6 billion 5 years ago, and that has since again gone up to over $130 billion. EPS is not the same story. It has not seen as consistent of growth, and that has been one of the struggles for Alibaba. They had a peak EPS of $9.37 in terms of GAAP EPS numbers. That has since fallen at one point all the way down to 92 cents of trailing 12-month GAAP EPS. However, in the last year or so, we have seen it rebound nicely up to $7.13, but then in the more recent quarter, they saw a little bit of a pullback down to about $5.33. And in terms of non-GAAP numbers, analysts are actually expecting EPS in 2025 to fall by around 30 cents. We can see that last year they put up $8.76 of non-GAAP EPS. This year, analysts are expecting them to put up $8.41. They have a low estimate of $6.79 and a high estimate of $9.59. However, analysts are expecting Alibaba to get back to growth in 2026 with an average EPS estimate of $9.48. And this is what you want to see from a company. You want to see them consistently growing their metrics. This is something that has affected Alibaba in a negative way over the course of the last 2 years. With their metrics heading in the downward direction, this has caused valuations to compress. And when we start seeing them expand their business like they're trying to do with Alibaba Guaranteed, this could hopefully lead to more growth and hopefully increase the valuation of Alibaba. Ideally, I'd like to see Alibaba trading somewhere in line with the broader market. The Nasdaq 100 right now has a forward P ratio of 28.05. The S&P 500's forward P ratio is sitting at a 21.72. And again, Alibaba is significantly below that, sitting at a 9 forward PE right now. And we can look at some of their PE ratios based off the Yahoo Finance EPS estimates for not only 2025, but also for 2026. And we can see that they range anywhere from 7.28 for the high end in 2026 of $10.77 of EPS, all the way up to 11.55 for a forward P ratio if they were to only put up $6.79 of EPS. And we can use PE ratios to project where the stock price could potentially go if it were to trade at different valuations. So we said that the S&P 500 is trading at a 21 forward P ratio right now. Even if Alibaba were to trade at a 15 to a 20 forward P ratio compared to the current average EPS estimate, which puts it at a 9.32 forward P ratio, that would mean that the stock price would trade anywhere from $126 to $168, which would be a 60 to 114% gain from the current stock price of $78.40. And even if Alibaba underperforms and puts up the lower end of their EPS numbers, they would be currently sitting at an 11.55 forward P ratio. And if we assume that it should be trading anywhere from a 15 to 20 2020, that means that the stock price would have to go up to $102 to $135, which would be anywhere from a 30% to a 73% return from the current stock price. When I'm looking at these companies that are trading in a range of 9 to 12 for their forward P ratio, what that means is the market sees very little growth in front of these companies. And when I personally look at Alibaba and China, I don't see their growth slowing down. I think they can get back to growing at a higher clip, and what that will ultimately do is lead to an expansion in their valuation. And when valuations expand, this leads to very quick movements in the stock price in the upward direction. Even if you don't like looking at valuations, looking at the underlying metrics of the business is going to be important. And here we have their free cash flow, and it's grown substantially over the course of the last 5 years, and I don't see this changing anytime soon. I think they'll continue to expand their free cash flow. They did see a little bit of a slowdown from 21 to 22, but a lot of businesses saw this as interest rates expanded and it really contracted some of their growth. But keep in mind that I do own shares of Alibaba. I think this company is going to be well positioned for the next 3 to 5 years. I think there's a lot of growth in front of them as they potentially could expand their valuation and trade more in line with the rest of the market. But don't buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for the joke of the day, what kind of music do chiropractors listen to? Check the comments down below for the answer. Thanks for watching.